Be your own bank is a slogan you may have heard if you are interested in Bitcoin. The concept is that you will have complete control over your finances as soon as you take self-custody of your Bitcoin. Your money belongs to you. How about becoming your own bank though? Choosing who gets custody of your wealth is a serious decision. We'll go over some benefits of self-custody in this video, along with the reasons it is an essential precaution to take when safeguarding your Bitcoin. So what is self-custody? The act of taking accountability for your Bitcoin is known as self-custody. You are responsible for keeping your Bitcoin secure rather than leaving it in the hands of an exchange or any third-party custodian. Since Bitcoin is regarded as a bearer asset, that is, the owner is the person who has the control over it and can spend it, it is crucial that you take self-custody of it. Gold and cash function in a similar way. Whether you realize it or not, when you take money out of an ATM, you are assuming self-custody. You can't trust anyone with your Bitcoin. There are third parties in the modern financial system everywhere. Let's say your employer pays you. Although it might appear that they are paying you, there is much more going on. Actually, what happens is that your employer instructs their bank to contact your bank and transfer funds to your account. And those are only a few of the middlemen in question. The involvement of several people creates a chain of trust. Your supervisor and you must have faith in the banks to carry out their duties. The banks have mutual trust. Furthermore, everyone must have faith in regulators, central banks and government agencies to carry out their duties in the background. But the weakest link in the chain determines how strong it is. A different word for trust among Bitcoiners is risk. There is always a chance, no matter how remote, that a third party will disappoint you. Money could run out in an ATM. The bank might incur too much risk and fail. Whenever you trust a third party to manage your money, you are betting on them to do it effectively. In banking and finance, it's a wager that is frequently lost. Several investment banks failed during the Great Recession, sending investors into a panic as their portfolios lost value. Additionally, exchanges have a dismal history of safeguarding your assets. It doesn't take much to ruin your wealth when it comes to protecting it. And since avoiding risk is the main goal of saving, trust is always a gamble. With Bitcoin, you can conduct transactions with other users without ever needing to trust a third party because it is a peer-to-peer network. It's freeing to know that you are no longer reliant on a bank or other establishments. With self-custody, you will be able to protect your wealth. The unique feature of Bitcoin is its limited supply. There will never be more than 21 million of these coins. This keeps others from jeopardizing your Bitcoin wealth. However, this cannot be said of the government-issued money, which is prone to depreciation. There is never more than one Bitcoin. How banks and other financial institutions truly put your money at risk is a fact of finance that is often overlooked. The bank typically lends or invests the money you deposit with it. Fractional reserve banking refers to a practice of banks having significantly less cash on hand than what is shown in the accounts of their customers. Similar schemes exist in the Bitcoin industry, whereby Bitcoin is lent to third parties in an effort to speed up returns. Lending Bitcoin or wrapping it in other chains carries some risk, even though some lenders are more reliable than the others. Generally speaking, in order to engage in any of these activities, you have to relinquish some control over your private key. This implies that there is typically no way to recover lost Bitcoin. Reducing your dependency on counterparties and effectively becoming your own fully reserved bank is possible when you take self-custody of your Bitcoin and hold your private keys. The best way to keep your Bitcoin safe over time is to hold on to your keys. Who controls how you spend your money is up to you. It is difficult to conduct business in the modern world without allowing a third party to see some aspect of your operations. Payment processors, banks, and credit card companies frequently have access to your financial transactions. These businesses abide by government regulations since they are frequently regulated establishments. When combined, these measures make financial privacy obsolete, unless you choose to conduct transactions in cash, which has high security risk, unless of course you utilize Bitcoin. Peer-to-peer transactions on Bitcoin network lets you do direct business with anyone you want as long as you abide by protocol guidelines. You can spend Bitcoin on any address if you have the key. This makes Bitcoin resistant to censorship by hostile parties or autocratic governments. It is important to remember that you must remove your Bitcoin from exchanges or custodians and transfer it to your own keys in order to achieve censorship resistance. No bank or government can freeze your wealth once it is held by using the keys that you own. Not your keys, not your crypto. not your keys and not your Bitcoin either. The best way to self-custody your Bitcoin is to own a Cypherock X1. It is the only hardware wallet which decentralizes your private key into 5 tamper-proof hardware parts using Shamir secret sharing. You just need 2 parts to reconstruct your private key and sign transactions. In the current world where hardware wallets keep your private keys centralized in a single location, Cypherock X1 offers unparalleled security and a unique decentralized approach to keeping your private keys safe. To learn more about Cypherock X1, head over to our website www.cypherock.com. If you found this video helpful, hit that like button, subscribe to Cypherock's YouTube channel, and make sure to check out this playlist which has videos about wallet security. Until next time, signing off.